The situation with bankruptcies, debt defaults, and countries unable to actually deal with their circumstances continues to go on, continues to increase, and in fact will get worse in 2023. I'm going to tell you why that is the case today. You got to stick with me. We're talking about major corporations as well as countries that cannot pay the bills. Welcome, truth seekers. You came to the right place. I can cover the information the others simply can't or won't. You've got to join this grassroots movement of nearly 300,000 people. Hit that subscribe and the notification beside it so that you can actually get this content each and every day. I want to show you the latest and greatest. I want to give you what you need to know right here. We could begin with Chinese builder halts all offshore debt payment on property market weakness. This is yet another company. You heard about Evergrande. You heard about all the rest. One after the other after the other. These are the dominoes falling. And that's why China internally right now, as well as externally, have been going into, let's say panic mode because of this. Being the $62 trillion asset of Chinese real estate started to have an issue. And why did this happen? Well, it worked in itself like a Ponzi scheme in a sense, where we found out with Evergrande and some other companies, they had these schemes in place where the employees would say, okay, get your friends, get your brother, get your sister, get everybody to get in and buy a new place. Yeah, it's going to be developed in the next few years, but put anything you can down. Then they were creating all these new different ways to get people to invest. I had covered this a couple of years ago. And as soon as the developments started to slow down because of the lockdowns, because of all these things that were going on in 2020, the whole thing started coming down. So you got what was, a continuous machine, but I'll consider the fact that there was a big lag in there of a few years. You're building empty cities. It's going to take a while to fill them. This really got into an issue back in 2020. You had now, on top of that, with increasing interest rates globally, it has made things even worse, right? And we're not getting demand from outside in, that's for sure. It's all domestic consumption. So there is a concern for these residential properties in these empty cities. And you could see where I'm going with that. Let me show you some data right here. This is a Hong Kong listed Chinese real estate developer who said that it will suspend all offshore debt payments. After careful consideration, the company will suspend payments to all offshore creditors to ensure fair treatment among all offshore creditors. Yeah, we don't want to just pay some people. We're just going to pay nobody. You've heard that before. China's property investment slump deepens with home demand weak. Year-to-date, real investment slumps more than forecast. May home sale gains slow from April amid the weak demand. So we can look at this piling up. Of course, at this time, you had seen China coming out and saying, okay, we're going to cut this type of interest rate and that type of interest rate. We're going to make all these cuts. We're going to reduce the reserve requirement ratio. When you see that RRR, essentially how much cash the banks have to keep on hand, we're going to bring that down. So that means they could lend out more. It's a measure of stimulus. And I've covered this just recently in a video that very few people saw, which basically talked about the China credit impulse. And so if you look at the China credit impulse, it determines what happens inside of China, very soon after, and then that goes to the rest of the world. And basically that's stalling right now. They can't get that stimulus out fast enough. The expectation is that in July, there's going to be major stimulus. If you want to know all about that, just subscribe to the channel. I'm going to bring you videos about it at that time. Until then, property slump is in play. Debt collectors' awkward moment. Their own debt is now sinking. So what they're talking about here in this article is Europe's debt collectors. Previously, they had a lucrative business of getting recalcitrant borrowers. And by the way, when I see that kind of word, I couldn't help but believe that that's probably somebody using the thesaurus. But anyway, just saying to cough up the money that they owe. But now they face the disquiet of their own creditors. They go in there, they buy distressed debt. Let's just say, oh, we're going to pay you 50 cents on the dollar for that. And they believe that, everything's going to be okay and they're going to profit from this. These are businesses that do this. Oh, let's get all this garbage debt. Hopefully, most of that will be able to be paid back, but we're only paying a small fraction of the total so we can make money. Oh, but now interest rates have risen. Now there's all these problems. And now these people are in trouble. When there's like this game that they've been playing and they're getting screwed over, you got a problem. You really do. And we're feeling that today. Fed's Bowman says bank supervision preferable to capital rules, essentially saying, hey, we've got to get people inside because they're not doing these companies, they're saying they're doing their stress tests and all these things, they're not doing it. And then you have the problem like we saw with the bank crisis, which is still going on today. That's fine, but when you bring interest rates down to zero, you create these problems. That's a simple matter of fact. They're only showing up, rising up to the surface because of these changes in interest rates. Let's be honest about that, okay? It's like, some sort of gangster video where suddenly up in the middle of the pond, something floats to the surface. Oh, and now the police begin the investigation and so on, okay? No, the problem existed before that, not when that body rose to the surface, okay? Kind of a silly analogy, but I hope you get what I'm saying. Highly leveraged companies are struggling to pay creditors and cover their expenses after Brazil central bank hiked interest rates to 13.75. All right? So you could see it's going on everywhere, same conditions that are clearly present. Raise interest rates cause a lot of problems. And this is, by the way, for corporations, really bad. Okay, you can see the corporate debt maturities 25 and 26. But I'm actually seeing a lot of that coming, trillions of dollars worth coming in the United States for basically over the next year and a half. I did a video about that few people saw. Definitely want to check that out. $1.4 trillion debt bomb. Check it out, okay? Zambia debt deal spurs rally in distressed emerging markets. Bonds of Sri Lanka, Pakistan, Ghana follow Zambia higher. I mean, this is what happens. Oh, they're going to get a way to pay back, basically take more time. Oh, we're going to stretch that out. No worries. We're going to restructure the debt. And then what happens? Investors come rush in. They want that yield. They think it's attractive. They say, well, okay, if the IMF said they're all good, they're good. But this is the risk, okay? Because they found themselves in these circumstances for a reason. Are they going to actually be able to pay back their debt? Not likely. But hey, investors will go in. It's no different, by the way, than Argentina doing a century bond. A century bond that was oversubscribed. Imagine that. They're not going to pay that back. And by the way, the value of them plummeted not long after. This is the world we live in today. Let's go into the next part of it, where I have a lot of concern about this. Paris Climate Finance Summit fails to deliver debt forgiveness plan. Countries in debt distress thrown a financial lifeline, but critics say the measures fall short of what's needed. So my favorite, Janet Yellen, was there, among others around the world. I didn't like it. I was wondering, hey, what's going on here? Why is the Treasury Secretary at some sort of climate thing? Like, what is this all about? Essentially saying that countries that are dealing with climate crises would have a longer period of time to pay back. That's what they're saying. So these countries, they're encountering, some sort of natural disaster. That means that they're not going to be paying up on their debt, and as a result, they can stretch that out for a longer period of time, restructure that. Part of that I found interesting in this article and what they talked about at this event was that they want to put additional taxes on countries. And I assume that that's somehow going to be floated as the way to pay this off. It is shockingly stupid to suggest this. So Macron, who, in such a socialist place like France, wants to make the whole, the G20 and the G7, all these, they want to make them institute a new tax on shipping, saying, hey, shipping causes pollution, therefore we should put a tax on shipping. What do you think happens? I'm a seller. I ship products overseas. And now suddenly, let's just say I'm buying my product. One of my products is $7.50. That's the included shipping cost. Let's say it's about $6 for the product, $1.50 for the shipping, okay? So if I'm buying 1,000 units, you do the math. Now what am I gonna do? Well, I'm now paying $1 extra, right? Let's just make up a number, $1 extra shipping tax. I'm paying $8.50 instead of $7.50. I'm just gonna take $1 and add that onto the top of the customer's price. Why? Because I have a certain profit margin that I need to operate at, or I will go out of business, I will shut down, and a bigger competitor will come in, or the Chinese supplier is going to come in, or better yet, Amazon is going to come in. So you see the problem here? All you're doing is taking that tax, which the customer is going to pay, and doubling it up. It's only going to make matters worse. This is not a solution at all, and yet they float it as the idea simply because they want to make sure that inflation is permanent. Inflation is permanent because it does not go down as the prices are rising. As they expand the currency supply, they make prices go up, but that is disconnected. People don't get that. Part of that here, I found this interesting. The EU's lending arm, the European Investment Bank, is to join the likes of the World Bank in exploring new loan clauses that will allow developing countries to suspend their repayments if they're struck by a natural disaster. The EIB is exploring ways to scale up climate finance. Like, this is what they're trying to do. They're using the whole climate, whether you agree with it or not or anything, it doesn't matter. The point here is that they're using this climate as a way to institute new taxes and to spend money on things they never could before. So companies are going to make billions and billions of dollars in the name of climate. That's what's happening here. Like I said, you could be on one side or the other. I'm not. I'm talking about the economics of the situation. Somebody's going to get rich off this. Here we go. After 3 years of relief, the Department of Education has announced that the pause on student loan payments, which was instituted in 2020, will be coming to an end. And of course, this means if they've got to pay back on their student loans, they are going to be burdened further as, hey, I don't have to pay this stuff off. I'm not going to pay it right now. They started to go into other things, start to spend on other things. We will see what happens. There's a lot of talk about just wipe out that whole $1.7 trillion of student debt. I don't know how that works, but good luck on that one. As vehicle prices have risen and overall inflation remains elevated, consumers are increasingly starting in higher than average LTV, loan-to-value positions to afford used vehicles. It's more important than ever for consumers to effectively manage their payments to fit within their budgets while also allowing for a cushion on other ongoing expenses like insurance and repairs. Basically, what's happening right now is that many people have purchased these vehicles. They are underwater on their loans. The price that they pay was at this absolute peak. Those prices have come down. They were buying at super inflated prices. There weren't enough cars available. Remember the shortages and all that. And now they're dealing with a very serious problem. The loans are being stretched out to like 6 years, 7 years, 8 years for a vehicle. Even used cars are going, I think the average is over $500 a month on payments. I've seen people paying $1,500, $1,200 a month on a vehicle. And I'm not talking about a Lamborghini and a Rolls Royce. I'm talking about normal level vehicles. It's crazy what people are paying today. And of course, that means that they're spending on the things that really take away from what I would consider more productive and sort of, expansionary parts of the economy. On the exact opposite end, I want to show you this. Dubai has been one of the great growth stories. I mean, it's been incredible. They're taking money in from everywhere, in particular, most recently, obviously Russia, because they're willing to say, hey, Russia, bring your money here. A lot of people were scared They didn't want to have their money inside of Russia, worried about the Ukraine situation. They said, hey, we're going to go buy some property inside of Dubai. We'll put our money in the banks in Dubai. And Dubai is saying, bring it all in. So what I found interesting was this article, Dubai's latest property spree has rich buyers taking more risk. Now, I read into it, and actually, certainly there's some level of risk, but actually I think it's less risk. In fact, I think it's much less risky. Dubai is doing something that I don't really see in other places. And essentially, each step of the way, so they had a huge bubble. It was crazy what happened leading up to the financial crisis. Everybody knows that. Half-built skyscrapers, all of that. But now what's going on because of that, they have put, and they could afford to do this because there's so much demand, is that each step of the way, the property developer, the consumer, let's say they're doing a condo. They're building a condo, it's got 1,000 units in it. Well, before, all people would have to do is put 10% down. Not anymore. They got to put almost the entire purchase price down. If they're buying land, before the construction happens, before they take any customer's money, they got to put all of that money up front, part of that money up front for the developer in terms of land. So there's basically no leverage being used anymore. So imagine all these developments that are taking place are overwhelmingly already paid for. That shows you extreme strength of the property sector. I haven't seen anything like this globally. You don't see that, especially when we're talking about this much demand. Now, what's going on with Dubai? Obviously, there's a lot. Money's coming in, as I said, with Russia. That's one. We're also seeing a lot of people who are like, online entrepreneurs moving to Dubai. They're saying, hey, I could pay no tax. Why not? At the same time, there's a lot of growth potential there. Many reasons. People want a more conservative environment. That's certainly very conservative. They're going there. There are many different reasons. It's not a perfect place by any means. There's some serious issue with water, but they've apparently been making it rain like once a week, supposedly. I don't know if that's true, unconfirmed. But anyway, no place is perfect, but I'm just showing you the difference. Like one area has like extreme bad debt situation, another like they're using very little debt. Complete 180, okay? And that's basically it. If you want to get out of debt, I created this video just for you. If you've got a friend, maybe a family member, these are just 10 tips that I will show you how to get out of debt. Click it and I'll see you there.